Alright, good evening, guys. Got a couple equities I want to cover tonight. First of all, we're going with the transparency on the first one. This is NVIDIA, and for some odd reason that I'm really still trying to figure out, I sold a put credit spread on this equity. I think it was a couple days ago, but that was an awful idea. Ever since last Wednesday, the tech sector has been in a full-blown sell-off. All of these tech stocks, pretty much anything in the XLK, has been in, I wouldn't say a free fall, but today NVIDIA got just hammered, which blew my put credit spread out of the water. I'll show you the damage here in a second. We opened up pretty good. It started off just perfectly fine, but then everything just started to go to hell. I bought back the short, lost my ass on the short, and then we came down into here, and my long put, I was letting it ride, trying to gain some of that money back that I lost on the short, and just trying to split up that spread. And then it started trading back up here. Well, what I did was, these resistance levels were on a different time frame, but what I did was I projected these resistance levels here, and what had happened was as the equity started trading later on in the morning, it pushed through these levels. And right here, when it pushed through this last level, I decided to get out of my actual long put because it had pushed through the resistance. So it was time to cut my losses at that point. So I was already out of my short. Right here, it was time to get out of my long. And then, of course, the support ended up holding. It then rolled over and died. So this trade was not a good one, and this is what we got over here. Down here, the 190 put is the one that I sold. I sold that for $2.11. I got my head ripped off on this one, guys. I lost $482 on that one, and then I let this long one run. I only bought the long one for 72 cents and ended up selling it. Actually, I'm not 100% sure what I actually sold it at, but it was I sold it at 126, obviously. But that is definitely I got my head ripped off on this one, guys. So get the transparency out of the way first. I'm going to try to get this chart out of the way. There we go. Nope. Okay. We got something going wrong here. I gotta get this chart off of here. Okay. We're gonna do one of those. Try to get rid of it. Oh, it's up here on my other screen. How about that? Let me wider and get rid of it. There we go. Okay, it was up on my screen above this. So that was NVIDIA. We're gonna go ahead and just chalk that one up and just get the hell out of there. Okay, on to the better ones. This is Allergan, and Wednesday Allergan came up hard. Allergan rallied hard when the Nasdaq sold off 125 points. Allergan rallied hard, and it rallied directly into resistance. So right then, I knew this was going to roll over and die. So I bought a put here that expired on the 8th of this month, and as you can see, it has just been rocking. So what had happened today was this put expired on this Friday. So, and I knew there's more to this run, so I needed to get a put option that was further out. So what I did is I sold the put option that I purchased up here, which I purchased it for, let's see, I purchased it for, let me get through this. I purchased the AGN put for $3.70. And today I just sold this put. I purchased it back here. Today I just sold this put in here for $9.30. So I don't have my calculator out. If you do the math, it's about a 250% profit on that put right there. So then I sold that and I purchased another put for further out. I purchased that put for about $8.30, and that one right now is trading for in the $9 range. Let's see, that one right now is trading for $9.35. So the Allergan trade is doing actually very well. So, and let me, now that I see what happened, let me go ahead and detach this screen. I'll bring it over so I can show you guys. Right down here, I purchased the second put for $8.30, and currently it's worth $9.35. And the one today was a profit of, so far today the profit was $212, but overall the profit's somewhere in the 500. So that's what's going on with AGN right now. And we're going to move on to AMGN, and right about at the close yesterday, they announced that their FDA has approved their Repatha drug for heart attack and stroke patients. So I was looking for a big pop on this one today. I had purchased this back here, and currently the AMGN is okay. I had done the same thing with this that I did with Allergan. AMGN. What I did was I purchased the call originally for $4.70 on this. That it was going to expire this Friday, so I needed a little bit more room. So what I did is I then sold that call for $7.70. Doesn't show it on here because it's not an active trade. So I sold that call for $7.70. This call that's right here that shows that it's closed right now. So what I did is I then opened a new call for January monthly expiration, which is 46 days out. This chart has a lot of room to run right now, and the squeeze, it has just fired, and I'm looking for this thing to pop pretty good. After I purchased the new call for 510, it did sell off for a little bit for the day, but I'm not really that worried about that. I'm looking for the bigger move overall, not just the day. So this is the daily chart for Amgen right here. This is where they approved, and this is the pop we got today. Right now, my target, I'm looking for up here at 194 with this small squeeze that just popped today. We actually have a squeeze on... let's see here. We have a squeeze here in the monthly also. That's really building some steam here too. So let's check the 4-hour chart. We have a squeeze that's fired off along here also on the 4-hour chart. The 1-hour chart, squeeze back here, rocked pretty good. And we'll just go down to the 30-minute for giggles. And we're not in a squeeze down the 30-minute, but overall, Amgen's is looking great. So we're gonna be holding on to that one for a little while. And let's see. So far we've made a little under 100% on the Amgen one. So that's what I got going on right now, guys. As far as my trades go, I've got a couple others, but I've got one on Play, which is Dave & Buster's. That's an earnings trade. I'm going to be selling that tomorrow because it's not through earnings. It's just the run up into earnings. I've got a tool that I'll show you guys how I research that kind of thing. I got another call on Pfizer going along with the XLV ETF, which is the spider ETF for the healthcare. The whole healthcare sector seemed to be like that. It was in a squeeze. So I got the call in the healthcare sector, spider, and also Amgen and Pfizer because the charts looked beautiful. As you can see right here, it held this support line down here and it just took off. Which, I mean, that was a great trigger right there. So I think I got in somewhere around back here when that squeeze formed, and now it's propelling pretty good. So The XLV, I did buy a call on that, and XLV rolled over today. I it rolled over on me, so I got out of it for a small loss. That looks like it. I'm pretty much covered all the positions that I have open. And I talked to Tim a little earlier, and he was wondering about Google. He trades GOOG. I trade GOOGL. I mean, I don't really think there's a difference, but he was looking at a possible call credit spread in this also. It does look like that we are going to be coming up to some resistance here, but these were projected on, I believe, the 15-minute chart, so they don't have any bearing on the daily chart whatsoever. So we're going to come down to the 15-minute here, and where these projections came in were from these swings down, coming into the zone from here to here, from here to here, from here to here. That's where these projections came from. And it looks like we're at a support decision right here. So he was asking about a possible call credit spread in this equity here, and what I told him was it looked like we're at a support decision, and what it looks like in the past, what it does is it rallies a little bit and then dies, rallies a little bit then dies. What I had told him is what I would be looking for in the morning. I'd be looking for a small pop here in the morning, and then waiting for it to roll over and die. Because you don't want to sell something first thing in the morning, and then with Google being such a high price stock, having that thing come up $10 on you and having to sit through that and take that stomach ache of watching $10 just get pissed away. So I would wait for the pop in the morning, and then after it rolls over and dies and starts its downturn, I would sell that call credit spread then. There's two reasons for that. It's a lot safer entry because we're up against support resistance right here, and also with that, if the equity comes up into here, you actually get more for that call credit spread. So you can sell it for more and then watch it roll over and die. And if you're going to sell a call credit spread on something like this, I would sell it for the end of this week. Don't sell it for anything past this week, because it gives it way too many days for that theta decay. When you sell something, you're really looking for that theta decay. So you want to, when you're selling a credit spread, you want to sell it for the week that you are in. Even if it's Thursday, I'll sell it for the week I'm in. It only expires 2 days from now, but that's fine. That's perfectly fine with me. I'd rather not sit on something all weekend and then all the next week not knowing what the markets are going to do. You do over the weekend, you do get that theta decay over the weekend. That theta decay is the premium that's lost on that option every day, and it's not just the days the markets are open. It works for Saturday and Sunday while the markets are closed also, so you lose that theta decay every day. Saturday and Sunday is part of that also, so you do get some good theta decay over the weekend, but just in my opinion, for me, it doesn't offset the risk that you take of having to sit through that for the rest of the week. So if you were going to buy a put on something like this and ride this down for a couple days, then I would just sell that call credit spread for the week. And if you're going to keep riding it down on that put, say the equity keeps going down, if you're going to ride it down on that put, then next week just sell a new call credit spread. You can sell 2 call credit spreads. That's not a big deal. Rather than trying to bite off a big chunk and sell it for 2 weeks out, sell 2 of them 1 week out. You actually make more money that way, and you have less risk on the table. So that's my take on Google here with GOG. That's my take on that. So I would just wait for a pop in the morning, and then once it starts to roll over and die, if it's going to do that, because when you get into a trade, we're always looking for a trigger. Right now, right here, this is not a good place to sell a call credit spread. So wait for that pop, and if it rolls over and starts to die, then sell it then, and take the big funds to the cleaner. So I think that's all I got for tonight, guys. Actually, you know what? I'm going to show you the fib work on Allergan that I was running on the 15-minute chart and following this whole thing down real quick. I'll cover this real quick. Okay, so I was projecting these resistance levels here throughout the day, Thursday, Friday, and today. I was projecting these resistance levels. And these levels, let's zoom in a little bit. Whoops, hello. Let's zoom in again. These resistance levels, this right here, was projected from these swings that were already in this uptrend. This swing right here, I projected that down to here, and this is where we should have seen resistance with this projection, and also that we were at the top of the price channel here. So what happened? We zoomed right up into this resistance. I mean, this candle, the high of this candle is 174.18, and this price is 174.15 and 174.17. There were actually two of them that overlapped. So you can't get much better than that. I mean, this thing came up into resistance and just rolled over and puked, which was great. So what I did is then I started projecting these down moves throughout the greater downtrend. I was projecting these down moves and projected the resistance for when we would find resistance after this thing moved down. And wouldn't you know it, right here, this thing bubbled on this. So it stopped dead in its tracks, and its down move here, came here, popped up. So what I did is I then ran fibs from these smaller swings here and here. I then ran that fib from down here to up here, and that gave us support, or not support, it gave us resistance up in this region here. It didn't actually get to it before it rolled over and died again. So after it started coming back up here, I did the exact same thing. I projected them to this low to find where our resistance would be in this small uptrend within the larger downtrend. And wouldn't you know it, right here, we blasted into it here, blasted into it here, and rolled over and died today. So it looks like here I was out on a fire run, actually, at the end of the trading session here. So what I would do tomorrow is I'm going to run some fib here, project these up, and see if we can hold again another level of resistance right here, and watch it roll over and die again. So that's how all this fib stuff works. I kind of made them different colors so it would be easier to see. There was another one right here that I projected on this move up, this small move up, and it slammed into it and then rolled over and died again. I mean, this thing's ripping longs heads clean off right now, which is awesome. But it terminated at this line and then started rolling right back over. Same thing here. Terminated here, rolled over. Terminated at this extension, rolled over, or this projection, rolled over. So it was that is definitely an equity right now that is really, really acting perfect for fib work. So I just wanted to show you guys that little fib demonstration right there. And for the daily on this, what we're looking for here on the target is the 1272 extension. That was my original target. But if you look right here, let me get the drawing tool out. If you look right here, that was awful. That's not working. If you guys look right here, for some odd reason this thing isn't working. Let's zoom back in and say screw it. What I'm trying to circle is the squeeze. We have a squeeze that's formed right here. All these red dots, this is a squeeze. And what that is, it is a contraction and volatility. It is a volatility contraction. What that is the Bollinger Bands have crossed inside the Keltner channels. John Carter from Simpler Options has a great video on YouTube of what the squeeze is, mostly because he's the one who developed it. So if you YouTube John Carter the squeeze, you'll be able to find that's about 20-minute video, I think, and he explains it very, very well in that. But a squeeze has formed here, and what we're looking for is this. The momentum started to trend upwards, and that's what this is. These are momentum bars from the momentum oscillator, and they just smoothed it out to make it a nice histogram. What we had today was this momentum started to curl back down. And when we're in a squeeze, if a squeeze fires and it goes to the downside, what I'm actually looking for now is the 16137 or the 1618 extension. I'm actually going to be looking for this level now, 16137. I'm going to be watching it. Once it gets to here, I'm going to really ratchet up my stops. So if it starts to bounce around on here, I'm getting out and I'll be done with the move, because this has been a great trade so far and I don't want it going against me. So, but if this squeeze fires to the downside, I'm probably going to stay into it down to the 1618 extension down here, and see what kind of head of steam this thing can produce off of a squeeze. So That's about all I got for tonight, guys. I will post this on YouTube and make it a little easier for people to view it, because Facebook loves making it take about 20 minutes to upload videos. So I've been rambling on long enough. We will see you guys on the flip side.